Hello, everyone. Welcome to the latest edition of ADGM Think, our podcast where we meet the leaders across the financial market and Abu Dhabi business community. My name is Wana. I work in sustainable finance at ADGM and your host today. In today's episode, we will dive into the evolving intersection of sustainable finance and energy. Our guest today, Kimmeridge, is a 5.5 billion alternative asset manager focused exclusively on the energy sector. Together, we'll explore why Kimmeridge is expanding in the Middle East with a strategic presence in ADGM and what this means for their global strategy. We will also examine how traditional energy companies are adapting to a lower carbon future, the role of asset managers in the energy transition, and how Kimmeridge integrates sustainability across its operations. I'm joined by Ben Dell, managing partner at Kimmeridge. Ben, thank you for having us.
Thank you. Glad to be here.
Could you please tell us a bit more about Kimmeridge?
Sure. So Kimmeridge started in 2012. As you said, it's around $5.5 billion of assets under management, and we're focused exclusively on the energy space. So we invest predominantly in the private space. We have a public investment fund and an alternative energy fund. So we go from the oil, gas, space in North America through to battery storage, carbon removal, afforestation. So really across the entire energy spectrum.
So why is Kimmeridge entering the Middle East now in 2025? And why choosing Abu Dhabi as its home?
Yeah, I think one of the things I always point out is we've been coming here to Abu Dhabi since 2016. We've been fortunate enough to have both Mubadala and ADIC as investment partners going back to 2016. So it's been a long road to get to finally open an office out here. I think one of the interesting things to me is if you look at the energy space right now in the macro markets, it's a really interesting time. Not only do you have the energy transition, you have the growth of AI, the re-emergence of power demand growth, the increasing energy intensity of the global economy. And I've made this statement. I think the two countries that really understand this better than anyone else right now are the US and Abu Dhabi. I think they understand the importance of low-cost, reliable energy with arguably the lowest carbon footprint you can deliver. And both countries want to be leaders in AI, and I think are going to be ultimate leaders in GDP growth. So it's an exciting time to be here in Abu Dhabi. It's an exciting time to finally open an office. And I think for us, this office here really represents a footprint from which we can build as we look to particularly the emerging countries of Vietnam, Thailand, Malaysia, India, Pakistan, where really a lot of the energy consumption growth is going to be focused.
So ADGM presence connects Kimmeridge operations in the US and the Middle East, serving as a strategic hub to meet the growing regional demand for high-performing energy assets in the region.
Yeah, and look, I think what's interesting here is you're seeing Abu Dhabi in many ways push a lot of the boundaries in terms of energy management. When you look at the combination of power supply that you have here, when you look at battery storage, when you look at carbon sequestration, these are a lot of things we're trying to implement in the US, and they're also being implemented here. So I think it's a great platform for us to participate in both countries.
Thank you. You mentioned the Mubadala energy partnerships earlier. It made headlines in our ecosystem in Abu Dhabi. Can you please tell us a little bit more about it?
Yeah, so we've built a really interesting platform in the US. We refer to it as sort of the British gas of the US, a fully integrated wellhead-to-water gas strategy. So we have an upstream business in Texas in the Eagle Ford Shale, which is producing around 510 million cubic feet a day. That business is integrated to an LNG platform, Commonwealth LNG, which we expect to FID in September of this year. And Mubadala Energy invested in that platform at the top levels. So we're excited to have them as a partner. It's been a great partnership, and I think that business, that platform has tremendous amount of running room over the next 5 to 10 years.
Kimmeridge is at the forefront of both conventional energy and energy transition. Key priorities for regional investors and governments that are taking significant steps in the region towards their efforts to achieve net zero targets. How do you see traditional energy companies, and especially the oil and gas sector, evolving to stay relevant in the move towards energy transition?
Yeah, I think from our standpoint, I like to explain our view on energy as pragmatic. And what I mean by that is, ultimately, I think everybody wants the same thing: low cost, reliable energy on demand with the lowest possible carbon footprint. And when we look at the space, you have two alternative ways of delivering that. Number one is you can take the existing assets you have and decarbonize them. So I think about oil production, gas production, even coal production, and then removing the carbon associated with that by reducing the emissions and then sequestering the emissions associated with that or offsetting them. And then on the other end of the spectrum, you have renewable platforms, obviously solar, wind, etc. And I think you have to pair that with storage and understand, how that system works on the other side. Ultimately, one of the things we talk about is that we continue to see energy consumption per unit of GDP remain tight. So global GDP growth is going to come with global energy growth. We're going to need all of the above to deliver it. And I think what we really want to work out is what's the most cost-effective way of delivering that system, because that's really what's in the best interest of the consumer and the business environment in terms of accelerating growth.
What role do you see asset managers like Kimmeridge play in accelerating the energy transition, especially when it comes to balancing the investor return with long-term climate goals?
Well, one of the things I always say is that philanthropy isn't a long-term strategy. And I mean that in the nicest possible way. And a great example of that is what we've done with our carbon business, Chestnut Carbon. It's afforestation. So we buy land, we restore it to conservation levels, and we sell the carbon credits associated with it. What's interesting about that business is it's a profitable business on a standalone basis. It makes infrastructure-like returns. And we sell those carbon credits at a premium into the market because people know they're verified, they're permanent, and because we own the properties. And I think in that area in particular, you see a lot of people build businesses where they want to talk about what they're doing from biodiversity standards and everything else, which is very honorable. But at the end of the day, as I say to our team, the more money we make, the more restoration we can do. So if you're a real believer in afforestation, reforestation, the best thing we can do to accelerate it is find a profitable business model and then ultimately exploit that. So I think when you look at the alternative energy space, and it's interesting the parallels you've seen in alternative energy to the conventional energy space in the US. And what I mean by that is when shale emerged in the US, it was all about growth, nothing about profitability. We saw a lot of companies, but the average return out there was around 0%. So you had high growth with no return. And then 2015 and really 2020, we saw capital come out of the space. We saw the space consolidate. We saw business models become profitable, and it just became a better, more sustainable business. In the alternative energy space, you're kind of seeing the same dynamic starting in 2016. It was all about growth, megawatt growth, power demand growth, solar growth, wind growth, carbon removal growth, and very little of it was driven by profitability. And now as capital's retracted a little bit from the sector, I think the winning companies that are coming out are those that have profitable business models. It'll ultimately make the sector stronger. It'll make it more sustainable. But you can't just go on running unprofitable business models for, social good. And I understand why people will make that argument. But at the end of the day, investors need a return to put capital to work. And I think that's where we've been very pragmatic, and we've developed business models that can generate a return. And I think that's why we've been more successful.
Interesting. I read about the three core strategies that you lead on, including Kimmeridge flagship funds, energy engagements partners, and the carbon solution that you mentioned. Is the carbon solutions strategy, was it part of the inception as a strategy, or it came later on as it developed?
No, I think it came along later, and it was interesting back in sort of 2021, 22, a lot of people launched alternative energy funds. We went out and did a relatively small first fund. And one of the reasons we did that is we wanted to make sure we could actually make money in the space rather than just gather assets. I mean, at the end of the day, our goal for investors is to be a top quartile private equity fund. I think we've gone out and done that. But to my earlier statement, if I think about conventional oil and gas, carbon removal, renewables, and storage, we want to be invested across that spectrum, and we want our investments to mirror global consumption. So I would expect our investments in renewables to mirror the growth in renewables. I'd expect our investments in conventional to mirror conventional. So we look at it on a holistic global basis. We want to be involved across the energy spectrum. We're not sort of just picking one narrow band and saying this is where we're going to focus. But at the end of the day, we have to deliver top quartile returns. And so we've sort of feathered into the alternative energy space. I think we've been disciplined. I think that's served us well. And as we go forward, I'm sure we'll expand that footprint out.
Thank you. As I'm managing sustainable finance, it's inevitable for me to ask you about the sustainable investment policy at Kimmeridge and how you integrate sustainability factors through the firm's operations and the investment analysis more broadly. If you can give us a bit of an overview.
Sure. I mean, first and foremost, we're net zero on scope 1 and scope 2 across all our funds. Actually, in our fifth fund, we created a company called Civitas, publicly listed now. It was the first net zero E&P on a scope 1 and scope 2 basis. So the first thing I'd say is we don't just talk the talk, we walk the walk. When we turn around, even on the public activist side, and tell public companies, you should do this is how you should reduce your emissions, this is how you can get to net zero, we're saying it from a position of having done it ourselves and having been leaders in this space. I will say we look at that as a multi-decade view. We try not to swing our perception of what we're going to do or how we're going to operate. But to me, best-in-class operations, net zero operations, high-quality reporting of our emissions across the spectrum, are really core to what we believe. I think one of the interesting things is when you start doing high-quality measurements of your emissions, generally they go up, right? You find more than you should have been reporting. And that's a difficult hurdle for a lot of people to get over, which is to actually have high quality data that might look like you're worse than peers, but largely because you're doing better reporting. So, we look to have 24-hour emission reporting, best in class safety, net zero on scope 1 and scope 2. If you look at what we're doing on our LNG business, we're going to deliver the first net zero LNG cargoes, combination of sequestration and afforestation. We've signed up with MIQ, so we'll have wellhead to water emission monitoring and reporting. So we really want to push the boundaries of being a best-in-class operator. I think that's good business. It's not, about making a particular statement. I think it adds value to your overall operation. And I think, we can set a standard that we want the rest of the industry to follow.
Ben, we would like to hear your view about what opportunities you see in the energy sector in the Middle East.
Yeah, so as I said at the beginning, I think it's a fascinating time in energy, broadly speaking. And then there's some really big thematics going through. I mean, obviously the one that everyone's talking about is AI and power. One of the things I talk about is the substitution of labor for electrons, when you think about that trend in general. To me, when I look at that, it means more power. It means more gas. Our expectation is the global gas market's going to double. I think that's both critically important for the US in terms of its domestic supply. It's important for the US in terms of domestic exports through LNG. It's incredibly important in this region when you think about the growth of LNG and gas supply in Abu Dhabi, which I think is going to be a big thematic over the next 10, 20 years, as you start to see countries like Abu Dhabi and Saudi come into the market alongside what is the established player in Qatar. I think the transition space is going to be really driven by the storage systems. Like, how do you think about storage? So one of the things I talk about is what does the optimal system look like? And I think that optimal system is nuclear, solar, gas for both storage and battery. And I actually think what's interesting is Abu Dhabi is in a prime place to demonstrate as a country that balance and how you can construct that energy system. I think sequestration is going to be another big area, how we think about that. Obviously, from a reservoir standpoint, Abu Dhabi's in a wonderful position to be able to demonstrate and execute on sequestration programs. That's something else we're looking at in the US as well. So, I think power growth, gas demand growth, battery storage, sequestration, these are all going to be really interesting thematics. I think the question out there is, where does oil end up? I mean, we've seen, at least in the US, oil names trade off somewhat this year. I think the US has been the marginal barrel in the oil markets. I think the shale growth that we've seen from oil has somewhat come to an end in the US. We've seen production flatten off over the last 7-8 years. And then the question is, how does that pair off with global oil demand growth? Clearly, global oil demand growth is decelerating. There's some of that's driven by substitution, as you're seeing in the Chinese markets and oil markets. But, one of the things I point out is if you think about going out as far as 2050, even if solar and renewables goes up 5x, natural gas has to double for coal to get cut in half. And really, from an emissions, from an environmental standpoint, reducing coal consumption, like we've seen in the US, the gas to coal substitution trade, is probably one of the most impactful things that can happen on a global basis. So the more countries like the US and the UAE can put LNG into the market, into these emerging countries, particularly for coal substitution, I think it's hugely accretive.
Thank you, Ben. Maybe one last question on AI, because it becomes such a buzzword in the relationship with technology. Since ChatGPT was launched in November 2022, we've seen a massive increase in anything related to energy consumption linked to AI. Do you think this development for AI, is it a blessing or a curse with, in the sector?
That's a good question. I mean, for the energy space, I think you're seeing this big convergence between tech and energy. These two things, these two big macro thematics are coming together, and they're going to become integrally linked. A lot of people ask, well, does this trend of increasing energy consumption go on? I think the real question is, at what point do you stop in AI? And I think the reality is you're going to keep going as long as the energy supply is there. I think there's some interesting dynamics that are going to play out, which is, if you think about the consumer is going to compete for power against tech for AI. And that's, I think, going to raise some questions over power prices, the risk of inflation. Can you add supply from a power standpoint to stop that happening? Interestingly, in the US, for example, gas prices haven't inflated for 20 years, so power prices are being kept pretty stable. And I come back to this, the two areas with the most competitive low-cost power is the US and, this region, the Gulf Coast region. So I don't think the rise of AI stops. I do think it will become more energy efficient in the way, it's used. But I think as it becomes more energy efficient, we're just going to use more of it. So ultimately, I don't see this trend ending anytime soon. And I think, as I said, tech and energy are going to become, integrally linked over the next 10, 20 years.
Thank you very much, Ben, for your time today. And I know how busy your agenda is when you travel to Abu Dhabi, and we hope to have you here anytime soon.
No problem. Thank you very much.